In this video, we're going to look through the main markets to gain a bit of a perspective on what's been happening. We're going to look especially at the DXY and how the structural levels on the DXY changed everything inside markets. You will find that when you understand structure, you will understand everything. Then we're going to go through Forex and show how you can take advantage of those kind of relationships. As we progress further, we'll go into the main markets and then crypto. We'll explore different rules and different understandings that can make a huge impact to your profitability. Let's run the numbers. Some pretty historic things are happening. Bitcoin's market cap is rivaling that of silver. Wow, what a day. We can see gold is not that far away in terms of asset market cap, and it's the largest asset market cap of any asset on the planet. Sorry, Peter Schiff. Bitcoin is coming for you. Having a quick look through the main markets, all sectors were just down marginally, 0.43%. Real estate, utilities, financials and energy did the best. Unfortunately, information tech did the worst. A week ago, the stock market was at extreme greed readings. It's currently just bordering on that extreme greed level. It's down to 73. There's a lot of optimism in the main markets, but semiconductors were quite overheated and they've started to come down. It's really good to see Apple coming up. This is an important stock for you to look at. Apple, since the start of March, has been coming down in terms of price, but it looks to be just trying to round the corner, just trying to do a bit of a cut over. There were some fantastic comments in yesterday's video. I just want to let you know, Kate and I appreciate you so very much for watching and for commenting. Doomy hit the nail on the head. When you look at structure, it gives you an understanding of the drivers underneath the ecosystem that exists between and inside charts. It's very powerful for timing. To give an example, when we look at Tesla, and Tesla has been trading for nearly 5,000 days, we're going to pop on the structural levels. When you understand where the structure is, everything becomes much clearer. Tesla has been having a lot of negative price momentum, and we could see it was crunching through all of these structural levels from the 189 to the 193 mark. When price comes down through structural levels, especially when they're so strong, and it has a negative fresh air gap below it, expect it to be caught in the structural levels below. And that's what we're seeing with Tesla currently. Not all structural levels have the same weight. Some are light, some are heavier, and some are much stronger. But all charts are base structure. The bond market is an incredibly large market, and when we look at the yields, which are inversely proportional to bond prices, we can see the yields fluctuated substantially recently. This sent shockwaves throughout the bond market, also throughout the commodities market, the Forex market, the stock market, and, of course, the crypto market. This is why we need to look at all the charts in concert with each other, because charts impact other charts, especially structurally. We're currently seeing that oil is on the way down. As the VIX, the fear gauge of the main market, comes up, we've seen the major indices start to come down with it. We can invert the VIX to get a bit of an understanding as to where the markets, the main markets, could be going. The dollar currently is on the way down. That is very good news for gold. And also gold loves the yields and the DXY to come down. That fuels its ascent upwards. This month, if your focus is on the DXY, the US2 and the US10, you're a legend. Because that's what you really need to be looking at this month. When you look at Forex, when we see the DXY or the Dixie, that tends to move proportionally with dollar yen. Also the Canadian dollar or the loonie and the yuan also, or the yuan, go all together. Now we've got opposites to that, the fibre, the euro dollar, the Aussie dollar, the Kiwi, and the cable, Great British Pound versus the USD. We can see these come up when the DXY and its associated clan come down. So please keep your eyes on these inter-associations, these intercorrelations. For members of the monthly service, yesterday I released the Aussie dollar and also the cable as a this month only indicator. Happy Forex trading, everyone! A lot of people think that there's no intercorrelation or interconnection between charts. Remember how we were looking at this big spike up and down? What caused it? The answer is always the same: structure. Let's pop on the indicator to release where that structure was. We can see that above this 1,300 level we had a lot of structure, but it wasn't holding. It was acting as structural resistance and was getting weaker and weaker and weaker. When you get a weakness where you have a big accumulation of structure, often even strong structure won't hold it. It's got to go down through multiple safety nets. And you can see here it was actually weakening on the way through. If it's not going above, where's it going? To the structure below. And that's exactly what it did. It hit this structural support and then bounced up. But it didn't make it all the way to structural resistance, which means there's still some weakness in the DXY. We may find it revisiting lower structural levels. But the key is, when we look at the main markets, and I showed you across literally everything, across bonds and yields and gold and crypto, the big spike here with the DXY reverberated shockwaves through the entirety of markets. This is why it's critical to know where the structural levels are, because they act as trampolines. As our beloved Beardy says, they fling price back. You can see how significant structure is. That little ping from that structural support level on the DXY sends shockwaves through the yields, shockwaves through the bond market, shockwaves through the commodities markets as well as the stock market. It really matters. Structure is everything. Only new traders and investors think that all the markets are independent. For example, if we were to look at Bitcoin, we saw that shockwave in the DXY, and it's played out on not only gold but also Bitcoin. It played out on Ethereum. It played out on Solana. It played out on Binance Coin. It hit XRP for a 6. ADA was seriously weakened by it. Doge was hit by it. AVAX was hit by it. If you don't think structural levels matter and you don't think that they do anything across charts, here is your proof. In financial markets, you will need a lot of rules to trade and invest effectively. Rule 4 is a particularly good rule. Rule 4 is that price moves in waves. Price is always going up and down, up and down. A lot of people say, oh, if the price is going up, it can't come down. That is, of course, absolute and utter rubbish. If price is going up, it's going to be moving in a wave function. This is why you must understand the price can come down as it's going up. Also, if you're in a down wave, in a corrective down wave, price can also come up. So you need to be aware of this. It's a very, very important rule. And it can be a game changer, as it has been for thousands of people. We have an incredible global family. If you're new to the community, please subscribe and reach out and say hi in the comments. What you will find, when you understand structure, you will gain an incredible edge, but it will take time and patience to pay off. Basically, we need to unlearn really bad habits. Many thanks to Rundle Ridge for your very kind comment, my friend. And Art said something that I really wanted to share with you as well. The next 1.5 years are going to be life-changing for those who have stayed the course or are here now. Learning how to buy and to sell, understanding what Bitcoin and the alts are getting geared up for. We're about in a mid-market time. Things could get pretty volatile around this time. You need to know where your safety nets and ceilings are. Thank you again to everybody who commented. We've just got an amazing, amazing community. Kate and I appreciate you all so very much, and TF Theta also shared something that I feel is very important to cover off. The Bitcoin halving is coming up, and don't forget the miners have a lot of sell pressure on them, and some of those miners won't survive. They'll get liquidated. So keep on doing your three-dimensional paths and your thinking. Do the cheat sheet and make sure that you're getting synchronized across the structural levels on the Tier 1, 2, and 3 charts. Another rule which can really help you out is one to do with Bitcoin and the alts. That is Rule 45. No alt can escape, and the key word here is escape, Bitcoin's gravity. If Bitcoin is going up, you can be pretty assured that your alts are coming up with it. How do we practically apply this? If Bitcoin is coming up, you can be pretty assured that Solana memes and all the other memes are coming up as well. DeFi is coming up, oracles are coming up, infrastructure is coming up. This is specifically inside the Solana network, but please be aware, if Bitcoin comes down, those things are going to come down too. This is the difference between investing and trading. When you trade, you have a lot of skill because you've looked at so many charts and you understand the structural levels. Investors typically don't understand structure unless they're really sophisticated. Your goal, if you're just an investor, is to become a sophisticated investor. You want to know when things are starting to turn around. Why is that? Because it really matters. Can you imagine if you buy up here and all of a sudden it tanks down 50%? You don't want to be doing that. You want to move with the market. The only way to move with the market is to understand where the market is going and what's driving a particular project attached to another project. For example, Solana DEXs are attached to Solana, and Solana is attached to Bitcoin, and Bitcoin is attached to the main markets, and the main markets are attached to the DXY and the yields. Keep your eyes on the structural levels of the Tier 1, Tier 2, and Tier 3 charts. It's vitally important. I just explained how the DXY can send shockwaves through the market. That's why I've been suggesting that you look at the DXY, but don't look at the structural levels on the DXY in exclusion to the US 10-year and to the US 2-year. But Ken, I only trade Solana. Well, if you only trade Solana, you saw what the DXY did to Solana. It punished it. Knowing how the structural levels on the Tier 1 charts interrelate with the Tier 2 and also the Tier 3 charts is incredibly important. It doesn't matter if you're a Forex investor, if you're a stock market investor, a commodities investor, or a crypto investor, or an indice investor, or trader. You really must know where the structural levels are. I hope that proved out by the look at the DXY. Have a fantastic weekend ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.